Hey guys, welcome to the video. So today is June 2nd. It's been a wild day in the market once again. I have a bunch of thoughts, a bunch of lessons that I learned today, a bunch of plays that I want to talk about, and what to do with GNUS, what to do with GAN, what to do with Vista, and I'm going to talk about the Zoom earnings call, and I'm going to talk about LATAM Airlines. There's a bunch of stuff I need to talk about. There's a bunch of plays that I want to talk about. There's a bunch of profit taking, some lessons. So let's get into some of it. Alright, so I just got done listening to the Zoom earnings call, and this was a weird one, I'll be the first to say. So when the earnings call began, the CEO started talking, and I was like, there's something wrong with my computer, right? I can't hear him. So I look into it, I read a couple tweets, and this man was on mute on his own platform. So the CEO was on mute during his Zoom call for Zoom earnings, which is so funny to me. That actually made the stock drop immediately. Just the fact that it's just funny. Investors were kind of freaking out for a second. Anyways, I bought into a Zoom put today. I'll throw the option on the screen right there. So my Zoom put, it's not this week expiry, it's a next week expiry for 210, so slightly in the money put option. The reason that I did this was to protect myself. I like slightly in the money options because that means I get the highest upside with the lowest downside risk. If you do way in the money, you can get hurt easily, and you can just lose money easily, and fewer gains on that one. And just a more immediate investment, you can only have lesser options because they're so expensive. Anyways, so I've been contemplating buying into Zoom earnings put options this whole week. I was thinking about it a lot during the weekend as well. The company is just so overvalued. I saw a tweet today that said Zoom is valued more highly than Microsoft was valued in 2009, and we all know that Microsoft has so many platforms, so much growth opportunity, and Zoom is not that. It's just a video call service. Has so many competitors in Facebook, FaceTime, just a bunch of stuff that you don't need to pay for. Bigger tech giants than Zoom can take over really easily. So that's my thesis on Zoom. So I just, yesterday the stock went, another 5-6% up. And today I was watching it, I was really thinking about putting a put option on Zoom. And it opens up 1% up, goes up 2% in the market. So I finally bought the option. Like I said, it's 210 strike price in the money. Not this week, but next week. So June 15th expiry. And my thesis on this is they're going to have great earnings this past quarter, of course, because the pandemic, but that's the perfect scenario for Zoom. The rest of Zoom, it can't get much better than this, you know? They can monetize it more, sure, but their users base is going to go down, even if video conferencing goes up in the future, because a lot of people like that. It's cheaper than traveling for a business meeting. It's still going to not be as big as it was during the pandemic, so I'm playing the guidance. So with earnings call, the most important thing that we need to listen to is the guidance they give. That's what affects the stock price. So investors always price in the next earnings. So investors look toward the future and invest towards the future. Nobody looks back and says, this was an amazing quarter. Even though they're not going to do great next quarter, they got more cash now. No, investors don't think like that. Investors think about growth opportunity in the future. So as I saw this is my thesis on Zoom, is I just can't see usage going up in the future. I see it at its max potential now and in the past. And as things open back up after this pandemic plays out, Zoom's usage is going to go down. And who knows if Microsoft, if Facebook can just take over the video conferencing space for fewer fees, lesser pricing, and people just like the platform more. They have more resources, more connections, and everything else. So after listening to this earnings call, I have a lot of thoughts. I knew that earnings was going to blow out of the water, so it did blow out of the water, even more than I expected, which scared me originally. This beat expectations by about 60% on EPS and revenue. So I was very scared, I'm not going to lie. I was scared of losing all my money in my put option. Even though I was a little bit protected, I could have got half my position back, but it's still not worth the risk to hold on to expiry for me. So the Zoom call opens, and pre-market actually, this Zoom was going up even more. It was up 6, 7, 8%. I mean post-market, yeah, post-market is up 6, 7, 8%. So I was watching this and just like, ugh, I'm gonna lose my whole position. So I stuck with my original thesis in my head. I was like, okay, I know that Zoom had a great earnings. It doesn't matter how great it was because I already priced that in, and I knew that was going to happen with my put option. So my thesis on the earnings, like I said before, is the guidance. So the guidance they give is what's going to affect everything, and the usage isn't going to go up. There's no way because of the pandemic, like I said. But we know that people are getting back to their jobs, back to classes, and everything else having to do with Zoom. So I'm more confident about this trade as of now, and it's looking good for me after hours. So I do think that Zoom is crazy overvalued. It has crazy valuation, something like $2 billion, and they only make $50 million a year. So that is very unreasonable. People are just, this is a pure speculation stock, pure bubble stock in a way. This could be like a space, Virgin Galactic stock. Whenever that just skyrocketed up to earnings, we just saw people buy in. A lot of traders just want to buy in before earnings, buy in before the hype plays, buy in before the rocket launch. So it's a lot of traders, it's a lot of bubbles. So after this earnings call, I think it's going to go down throughout the week because people are finally realizing that now that the volatility is priced in, there's no more volatility priced in after earnings. There's a bunch of volatility leading up to earnings, and then after that, it's all downward movement, in my opinion, is what's going to happen. So I could expect this stock could go down to 150 within the next 2 weeks. Yeah, the outlook isn't great, in my opinion. I'm not really a fan of the company, of the outlook, of the security reasons. There's a lot of scary stuff that goes on with Zoom. So that's my thoughts on the earnings call, my thoughts on my put option, and the reason that I placed the put option on Zoom earnings. Alright, so let's get into GNUS. So this stock is crazy, ticker symbol GNUS. So I recommended this about a month or so ago. It's trading at $1 a share. Yeah, so the news that came out is that they're having their cartoon channel come out June 15th. This is a big brand with kids' toys, with the channel, a bunch of big players in this space, a bunch of big stars that are helping this company out. This is definitely a company that could blow up, and I saw pure hype, so I got in before the pure hype started, and now the pure hype is taking off, leading up to the June 15th date where they come out with their TV channel. So now that I've made 400% on GNUS since my recommendation, should I take profits? Should we sell? What should we do with this stock? So in my opinion, there's more hype to come. This hype is just getting started. A lot of people like this as a long-term stock as well. They see $10 to $15 in its future. Now, I don't know about the business. I don't know about how the insider team works, but they do know how to get hype. They do know how to help stars get their name out there. There's a bunch of big stars out there that are helping this business out. So I really like it. I do like it long-term. I don't know if I like it enough. I probably will take profits sometime leading up to June 15th. I don't know if it would be like the 14th or 13th when I take profits, but I probably will, just in case. I just like to secure profits as an investor. I think that's the smartest move in case something bad happens. People aren't impressed with the TV channel. So I'll take profits before then, but for now I'm holding my 400% up position, and I'm just reaping these gains, and I do think more hype is to come as more people realize this stock, and the stock over the past 2 weeks is doubled pretty much. It's crazy. After hours, it's up another 15%. It was up like 50% today again. So yeah, I'm really excited about this stock. And yeah, we're going to get more gains to come and take profits sometime before the 15th. Alright, so the next stock I'm going to talk about is LATAM Airlines, ticker symbol LTM. So I had a member of the stock group recommend this stock actually. In Chile, they need this stock to travel from country to country, like, not this stock, but this airline. So they need this airline to travel from country to country. The other day, LATAM filed for bankruptcy, Chapter 11, which means they're not going out of business, but they're saying they don't have the funds, they need help to keep going. So this has to be a government-backed company. This is kind of like a Boeing. This is kind of like anything that the U.S. government needs, but this is for the Chile government, or wherever country it is, I'm not sure, but I know that it has to do with Chile. So I didn't take a deep dive into stock. It was just a speculative position, but I made a pretty good sized position out, and so I created that position yesterday after we talked about it a lot in the private stock group. And this guy knows his stuff. He's from over there. He knows the airline, and he just knows that there's no way that this could go out of business. So after they file for bankruptcy, the stock gets hit down to like $1. And shout out to you guys. Shout out to you if you're watching this, man, for recommending this stock. And it was a great pick. I researched a lot of it, and it looked good. Everything that he was saying was true. The thesis behind it is this can't go out of business. There's no way the government is backing it, and they need it to travel. There's no way this business can disappear. So today, it was up like 5%, and then randomly it has like a 50% pop up. So I knew that was coming at some point, because people have to realize that at some point this stock is not gonna go to zero. Chapter 11 bankruptcy is not saying we're bankrupt, we're quitting this business is just going away. No, they have their planes, they have their airlines. So yeah, it's got to go up at some point once the government backs up. So news comes out that the government does have to back up. Investors realize this, finally price it in, and the stock goes up 50% today. We knew that was happening. This is a perfect opportunity, an easy, low risk trade. It's the lowest value that it's ever been pretty much when we bought in. So amazing value on that, amazing bounce back play, amazing bankruptcy play. Kind of like Hertz, it went up 100% one day. Now we're at LTM, it goes up 50% one day. Who knows if there's more gains to come or not, but this is an easy play. We can look out for stocks like this in the future if they go bankrupt, but they have to be government backed. Like for example, if Boeing filed for Chapter 11 bankruptcy, this stock is not going to zero. We know that. So at one point when people realize that government is going to fund this no matter what, that's when the stock pops, and we just got the pop for LTM. So congrats on the gains. Thank you for recommending this, whoever you are in the stock group. I forgot your name. I apologize, there's a lot of you guys, but awesome pick. Congrats everybody in the stock group for investing in the stock and making easy 50% on your money today. And we're up like 65% overall in our position, and just easy money, easy gains. Just do your research and you find stocks like this. So yeah, it's pretty easy money. Congrats. So another stock that I want to talk about is Vista Outdoors, ticker symbol VSTO. So I actually recommended this stock about a month or so ago, and this stock was at like 6 or 7 when I recommended it. I saw this as an outdoor play. I saw people going outdoors. Vista's great outdoor brands. They have a ton of brands if you look on their investor relations page. So I knew that people were going to go outside more because of social distancing, a lot of that stuff. So I just saw this as an outdoor play. I bought in, I recommended it to the stock group to look into it, possibly make a position if they're confident in it. So this stock has pretty much doubled since I recommended it. Now, I did take profits. This is a mistake. This is a lesson that I learned today. Stick with your original thesis. So about a month ago when I bought in, my thesis was once people realize the full potential of this could double, this could triple, this could go crazy, this could go up to $20. So I bought in with the want to hold it. So after the day I bought in about a month ago, the stock went up 18% in a day or 20% in a day. And I was like, you know what, 20% in a day, I'm happy with that, I'll take profits. So the next day after that, this is still about a month ago, just one day after, the stock goes up another 10%. So I took my profits the day before after going up 20%. So I'm like, okay, this just went 10% up today, I just missed out. Why would I buy in now? This has to go down after the hype. So the next after that, it goes up again, 2%, 3%. So I'm like, you know what, I'm still gonna wait for a pullback. The next day, 10%. So I'm like, oof. So I finally bought in then, but I missed out on 50% gain because I just realized that sometimes it's not smart to just take profits. Sometimes you gotta hold all the way through your thesis, and your beginning thesis is what you need. So once the information gets out and investors finally realize this, that's when the stock pops, and I missed that opportunity. I missed 50% on this stock. Now today I got up another 10% or so, so now my Vista Outdoors position is up like 40% total, but I could have had 120% total if I would have held on and stuck with my original thesis. I'm pretty upset that I didn't stick with my thesis on this one, and it's just a lesson to not take profits too early. Stick with what you know. Don't stick with high plays, taking profits, taking all that. So just a lesson that I learned. So in the future, just buy in, stick with the original thesis, sell out once investors price in the information that you know that they don't know. So once they realize, and it may take a week or so for investors to fully realize this, that's when you sell. That's the moment that you sell the stock. So lesson on that, not to sell before the information gets out, not to take profits too early, not to just feel confident that it's going to drop back down because it might not. Okay, so after this Vista Outdoors lesson, I'm using this lesson on GAN. My favorite play that I went super heavy in about 2 or 3 weeks ago. Yeah, I've said before, this is my favorite position. I have like half of one of my portfolios in this position. I was up like 56% at one point on my $10,000 investment, so that's pretty crazy. So actually the past 2 weeks, this stock has just been riding up. This stock is, like I said, it's up 56% since then. So we got to realize that there will be a pullback at some point when stocks like this are super overhyped. Same with Penn National, same with DraftKings. It happened to both of them. This is another lesson. The lesson that I learned from Vista Outdoors is not to sell until your original thesis is realized. So 2 weeks ago when I bought in, I had the thesis of sports betting is going to be huge. Sports betting is going to go crazy once the NBA comes back, once the MLB starts, once the NFL season starts. People are going all into sports betting, and I do think it's going to take off the next few years, the industry as a whole. So that's my thesis, and I do see this as a long-term hold, and it will pop up when NBA comes back, when MLB comes back, and the announcement dates are finalized. So that's my thesis on that. Once numbers come out on GAN, I love their company. I love the value of the stock right now. It's still my number one position, still my number one favorite stock to buy. So today, after this stock has been riding up the past 2 weeks, today I finally had to pull back. This is down like 12% today. So should I have taken profits yesterday when it was up another 20%, when my position size was 56% up? Why would I? This is a long-term hold. There's no point in speculating. What if it had gone up another 10% today? Then I would do the same Vista Outdoors problem that I had where I didn't buy back in. You just miss out on gains. So sometimes it's smarter to just hold your position, hold until your original thesis is realized. So I'm holding this position until every information that I know above the market is realized. Because the sports betting industry is going to be gigantic. Once people start realizing this, once earnings come out for GAN and they hype up the guidance, investors are finally going to start realizing this, and this is going to be a big play. So I'm holding tight. I'm not taking any profits on this stock. If anything, I'm adding position. I actually added another $1,000 in this stock today because I just love it so much. I love the value, and this is going to be the next big thing. So I could see us going 40 plus on GAN. So that would be an easy 150% gain, if not more in the future. This is a 1 to 2 year hold for me, 1 to 2 year outlook. And I do think we're going to make 150% to 200% at some point on this position. So there's no point in selling now and securing profits when you're just missing out on more gains. So that's a big lesson that I've taken into account with GAN that I learned from Vista Outdoors, and a lesson for you guys to use in your own trading. Okay guys, there's another thing that I want to talk about is, so the other day I placed a put option on Blue Apron, ticker symbol APRN. This was yesterday. I saw the stock go up 28% for no reason. This is pure speculation on a buyout, which I really doubt it's going to happen. 90% chance of not happening in my opinion. So I placed a put option on Blue Apron. And first of all, this company the insider team is horrible. The CEO is horrible in my opinion. The business model is not taking off anymore. It was a play during the pandemic because of the hype, because people needed food delivered to them, but now I don't see any opportunity in this stock. The fundamentals are horrible, the balance sheet's horrible. So I bought a put option slightly in the money to expire in July 17th. So today, like I thought would happen, the stock dropped 10% down. So you would think my put option went up, right? No, my put option was up 1% today. So I'm up like $5 on this put option. So what's the point of buying this put option on Blue Apron if everybody thought this was going to drop anyways? This is just very interesting to me. I usually don't hold put options to expiry or call options to expiry. I like to trade options. So I'll hold the option a week. When I'm up 50%, I'll sell out, take profits. So that's my plan on Blue Apron. I was like, there's no way the stock goes up tomorrow. There's no way the stock goes up later in the week. It's very overvalued, very overhyped. It's not a good company. People are going to realize this very soon. So that's my thesis on this trade. So I bought in to a put option. And today it goes down 10%. I'm only up 1% on my put option. So why did this happen? Why did it doesn't make sense, right? Because my money should be leveraged in a put option. While the stock goes down, my put option should go up 20%, 30%, 40%. So let's talk about this real quick. So if I had a put option that expired this week, this would be big gains for my put option. Instead, my put option is expiring in July 1st. So I'm not holding to expiry. So this put option is not going to go up very much. Since my expiry date is far out, it's just not worth the risk. So the lesson that I've learned is I should have placed a put option on Blue Apron that I'm confident in the option for the stock to go down. I should have placed a put option expiring this week or next week. So then this drop actually affects what I do. I don't care about 1% gain on my put option if this stock goes down, because the risk reward isn't worth it for me. For myself to make $5 on something that I knew would happen, why would I not make 100% of my money in a week? So on quick plays like this, the lesson is to have an earlier expiry date. If you have far out expiry date and you're just planning on trading it, there's no point. You gotta, if you're gonna plan on trading it very soon, in a week, 2 weeks, you gotta place an earlier expiry date. That way your money is better suited, money is better leveraged to the earlier expiry date, so people can actually act on this and then hold it to expiry and actually take the profits, the differential between the stock and the strike price. So lesson on that on Blue Apron, ticker symbol APRN, and put option lessons. Okay, I'm going to talk about one more stock. This stock, ticker symbol DGLY, Digital Ally. So this is a play on the riots. So there's a ton of riots right now. As we know, George Floyd, rest in peace, Black Lives Matter. So the riots are going on, and I studied up on this stock. It was actually on my top 3 stocks to buy in June 2020. I studied up on this stock, and I saw in the 2014 riots, this stock went up to $5, $6, $7, and now it's back down. It was kind of a high play during that time, so I saw this as a high play during this time for these riots. So I was like, could this go up to $5, $6, $7? So I just learned my lesson on this today. So yesterday morning, pre-market, the stock was up 500%. It was up to like $5. Okay, so it dropped back down. It opened up at 90% up. So that's when I bought in. I actually rode the wave up to 140%. Yesterday, I sold out a quick 500% profit just like that. So I was like, okay, I can keep doing this. As you know, I'm not a day trader. I'm not comfortable with day trading yet. But I'll take profits if it goes up 50%, and it's just easy gains, right? So it goes up 50%, and then I sell from 90% to 140%. I rode that wave up. I sold right there. So after I sold, the stock started going back down. It went back down to up 120% for the day. So I was like, why not do this again? Why not ride this wave up once again when it pops it up again? So I bought in heavy again, like $2,000 in this stock, right when it was up 120% for the day. So this stock starts having a slow downtrend for the day. It actually closes the day up 77% only. So I'm down another $500, so I'm about even on this play. Actually, yeah, I'm about even on this play. So, I hold it overnight. I wake up in the morning, pre-market's down a quick 17%. I'm like, oof, did I just make a mistake? So, as market open, there's no point of holding this if I'm not super confident it's gonna go up. It's a trader play, it's a day trader play, it's a swing trader play, but short term. People took profits on this yesterday. People just started selling out today. So I knew as soon as market opened, I'm not comfortable holding this risk factor. Even if it goes up later in the day, it's just not worth it to me to lose even more than I've already lost. So I sold out when it was down 17% today when market opened, and I cut losses just like that. So the lesson that I learned in this situation is don't invest in what you're not totally sure about. Don't invest in day trade or hype stocks unless you're just day trading. What I did from 90% to 140%, that's a perfect example of stuff that we need to do. If you can capitalize on that hype that you know that's going to happen early market, since all the volatility happens early market, and then the downtrend starts after that, that's when you got to know, sell out just like I did 90 to 140%, and then why would I back in at 120% and hold to the next day? That's the mistake I made. I got greedy, and I thought I could do it again, and I just broke even on this DGLY play, even though I was up $500, just super quick. So I should not have gotten in a second time. I shouldn't have gotten greedy. So it's a lesson on that. Don't buy into stocks that you're not for sure about. Long term, have upside. It just didn't have upside. It was just a hype stock, a day trader stock. Now, could this go up another 50% tomorrow? Of course it could. It's a hype stock. It's a riot play. People are rioting. The rioting's getting worse and worse. So this stock could for sure go more, but it's not worth the risk reward factor in my opinion. It's not something that I'm sure of. I like to trade on what I'm sure about, what information I have above the market. And I didn't have any information leverage above the mark in this situation. So I sold out of my position. I cut losses right there. I made sure I wasn't going to lose any more money with something that I wasn't sure about. So that's a lesson on DGLY and why not to buy into the day trading hype stocks only. Also, guys, I do want to reiterate that I'm not a financial advisor. This is not financial advice. This is just me strictly sharing my lessons, my positions, what I've learned in the market with you guys, so you guys can become better self-sufficient investors as well. Thank you guys for watching the video. In the description, if you want to join the stock group, the link is there. If you want 2 free stocks on Webull, valued from $12 to $1,400, I would love for you to use my link to sign up because this benefits me as well. It'd be an easy way to support my content, my channel, for you to get free money as well too. So you should go for that. Also, the Robinhood link is down below if you want a free stock. Another way to support my channel, another way for you to get free money. So if you don't have those accounts opening, you should go for it. I appreciate you guys watching the video, staying till the end. If you have any questions, DM me on Instagram. Any questions about the stock group, any questions about investing in general, I'll be sure to get back to you at some point. I'd love to help you guys. I'd love to help you guys become better investors. So yeah, thanks for watching. Great day in the market. Let's get these gains.